the reason why we love it so much. I mean, it expands our capabilities. It's something we've been angling to do, is to expand our apparel capabilities. And of course, Sweaty Betty is an apparel first brand. So that was number one. It also is a digitally first and DTC native brand. So that's another big pivot we're making as a company. So we think it's all those reasons that it's the perfect acquisition for us at this time.
And Wolverine Worldwide, if you don't know the name Wolverine Worldwide, you certainly know the brands that you market and you license. We've got names like Saucony and Merrell and many, many others. So does this mean that we may be seeing more women's apparel from Merrell and Saucony?
Absolutely. You know, one of the reasons I joined Wolverine and they brought me in was to pivot to a direct-to-consumer first mindset to enhance our wholesale business. And in order to do that, you have to have more categories than just footwear. And so apparel has been something the company has been focused on for the last few years. We've been doing it organically, but really felt like an acquisition would be the way to supercharge our capabilities there. And specifically for Merrell and Saucony, as you mentioned, we think there's going to be a great partnership there.
And Brendan, many years ago, you were spearheading Neiman Marcus's online business from the very beginning. So that's sort of where some of your expertise lies. Sweaty Betty, as you mentioned, was a digitally native company. And so what does that mean for your outlook for the rest of the brands that Wolverine manages, and Sperry and Keds, when it comes to online? Are you looking to move away from some of the retail partnerships and move more directly to consumer with these brands?
Yeah, I wouldn't say move away. I think, again, it's not an either or, it's an and. But we definitely are changing our focus to be a direct-to-consumer first business. We've stated that our goal is $500 million for our brands.com for this year, based on a $2.4 billion overall business. And we think that being able to tell our story directly to the consumer will only enhance our relationship with our retail partners. So it really is and, not an either or. And with Sweaty Betty, they have some strong wholesale partnerships with Nordstrom's here in the U.S., Harrods in the U.K. So they're following a similar playbook, just doing it from a direct-to-consumer first, birth.
There's obviously so much that we could talk about here, but before we let you go, because we're running out of time in the show, you had a really phenomenal second quarter, of course, but there's a lot of tailwinds right now and headwinds in retail, and so you have to manage them all together. What's going on with the supply chain for your company and all of the kinks? Are we going to see gaps on shelves and on racks when it comes to some of your brands because they're simply stuck in container ships off in the ocean somewhere?
Yeah, well, it's certainly a macro problem impacting not just our business, but industries across. We don't have a demand problem right now. Our demand has never been higher. But as you mentioned, the supply chain for everybody is a little bit disjointed. So we're working hard to solve for that. That's one of the benefits of having this roster of great brands, is we have these centers of excellence that can work with the brands and really focus on getting the goods here while they focus on the product and the messaging. So I think we're in better shape than most, but certainly it's something we're all dealing with. And you mentioned our history together. A lot of it was around Black Friday and how promotional things had gotten. I think it's terrific that we've really, across the industry, gotten back to selling regular price. And I think that's going to benefit our brands for the long term.
Shepard Smith here. Thanks for watching CNBC on YouTube.